And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Tonight, we're diving into a significant development in the UK housing market, where institutional investors are making big moves. US private equity giant Blackstone has struck a deal with British house builder Vistry, acquiring 1,750 new homes to rent. This isn't its first rodeo either. This is their second acquisition from Vistry in less than a year, signaling confidence in the rental market's potential. The homes, valued at a whopping 740 million, are located in the southeast of England, an area known for its high demand for housing. This deal reflects a growing trend among institutional investors who see rental properties as stable investments, especially amidst uncertainties in other commercial sectors like offices and retail. These homes will be managed by Leaf Living, a private rented sector housing provider backed by Blackstone and Regis. Leaf Living aims to provide high quality housing for residents while ensuring excellent management and maintenance standards. The first completion under this agreement are expected by the end of this month, with the majority set to be finished within the next 2 years. Interestingly, Vistry has raised its annual home building target despite subdued market conditions, showing confidence in the demand for its affordable homes. With the rental properties becoming increasingly sought after, this move by Blackstone emphasizes the crucial role of institutional investors in providing high quality housing across the UK. Also on Follow the Money this week, in a bold financial maneuver shaking up Wall Street, two heavyweights, BlackRock and Citadel Securities, are throwing their support behind a new contender in the stock exchange arena. The newly formed Texas Stock Exchange Group, with substantial backing from BlackRock and Citadel Securities, has announced plans to launch at the Texas Stock Exchange in Dallas, challenging the dominance of established exchanges in New York. Having raised an impressive $120 million, Texas Stock Exchange intends to file registration documents with the SEC later this year, positioning itself as a national securities exchange. The Texas Stock Exchange will target companies seeking relief from increasing compliance costs and regulatory environment at the New York Stock Exchange and NASDAQ. The Texas Stock Exchange aims to offer a more competitive and innovative platform focusing on quote activity, liquidity, and transparency within the financial markets. It's important to note that previous attempts by upstart exchanges to challenge established markets have faced significant hurdles. The backing from BlackRock and Citadel Securities signify a vote of confidence in the Texas Stock Exchange ability to disrupt the status quo. To succeed, the Texas Stock Exchange will need to prove its ability to attract significant trading volume and establish itself as a credible alternative. That's all for Follow the Money this week. Thank you for joining us. Join us again next week for the latest updates in the world of money. Back over to the studio for Trade of the Day. Welcome to Trade of the Day, our groundbreaking weekly trading series where we reveal the secrets to achieving consistent weekly profit in the fast-paced world of day trading. Join us every week on this exhilarating journey as we decode the strategies and mindset needed to harness the power of the market and unlock remarkable financial growth. Whether you're a new trader seeking to build your wealth or a seasoned investor aiming to amplify your gains, our series is your roadmap to success. Get ready to revolutionize your trading approach and embark on a path towards achieving your financial dreams, 1 week at a time. Also, we'd love to know where in the world you're tuning in from, so post in the comments below. A reminder that this is not financial advice and that trading comes with real risk. My name is Alice and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet needs access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market, taking one trade a week using one model, risking no more than 2% of your equity, looking to make a 1 to 3 risk to reward, risking 2% to make 6%. We had a total of 6 trades this week for a potential return of 20%. It's important to note that everything that we share here is how we trade at I'm the Trader. But before we dive deep into this week's trade of the day, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader must have in their trading to survive and thrive in the financial markets. If you don't have these 3 pillars in your trading, you're setting yourself up to fail. Confidence in your trading edge comes from three things. One, understanding the market and how it operates. Two, having one trading model that has IPTA signatures. Three, having a plan and process that you follow every single day. Successful trading is boring. You're doing the same thing over and over again. This is the three-step process I use to take trades weekly. Step one, condition. This is based on a higher time frame directional bias. Step two, stage. What sets up your trade? What does it look like? Step three, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step two, the stage, because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for a setup and you don't need to pay me for that one. Step one, condition. Determine the higher time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This will give you your higher time frame condition going into the week. Several factors go in to determine the higher time frame direction. However, you only have two options. Is either you're expecting the weekly candle to expand higher, or you're expecting the weekly candle to expand lower. Step two, stage. What sets up your trade? What does it look like? First, we look at the economic calendar for the week. It lets us know when to look for a setup. We look for medium to high impact news drive to narrow our focus. We stock setup on calendar day and after the news release. Every day this week was an optimal day to trade, bearing in mind this week was a special week because it was NFP week. Secondly, we look at what sets up your trade. What does it look like? This will be your model. If your weekly analysis suggests that price is going higher, then you're in a buy program and should be hunting long formation. For our buy model, we want to see price trade below a key low, displacement higher causing a market structure shift. The displacement leg must have a fair value gap CB near the swing low. We wait for a swing high to form to anticipate execution. If your weekly analysis suggests that price is going lower, then you're in a sell program and should be hunting sell formation. For our sell model, we want to see price trade above a key high, displacement lower causing a market structure shift. The displacement leg must have a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. Once the stage is set, when and how do you execute? For execution, we're looking to enter on a fair value gap or order block created in a displacement leg that caused the market structure shift. You have two options here. You can either enter a limit order at the fair value gap or a limit order at the order block. We use the fair value gap created in a displacement leg at or near the 50% of the equilibrium. You can also use the low-hanging fruit option, meaning the one closest to price. Your stop loss will go above the swing high for a sell and below the swing low for a buy. We're targeting a 1 to 3 always. It's important to know that you can have both model forming a span of a day or a week, but your high probability trades will be in the direction of your weekly program. Here are some factors to consider for high probability setup. First, we have time, the most important aspect of trading. At what time is the setup occurring? Then we have range. Where are we within the range? Are we in the upper, mid, or lower quadrant with respect to buy or sell? Then we have liquidity. Is there or does price create liquidity in front of the fair value gap or order block? Once price takes this liquidity in front of the fair value gap or order and then enters the fair value gap or order block, you should see an immediate reaction. Lastly, when can you no longer enter the trade? Where is your cutoff point? For me, once price leaves the 0.25 fib extension, I'm no longer interested in getting in a trade. Trading is a solo sport. You have to make it unique to you and your personality. All of this sounds complicated, I'm sure, if you're hearing it for the first time, but it's really simple. You just need to show up on the charts and look for it. Now let's head over to the charts and look for it in price action this week. Welcome to Tracking IPTA. Price action this week was a little wild as expected due to it being NFP. If you're new to trading, this is the 1 week you want to be cautious of. I learned that I cannot trade counter trend trades the same way I trade my pro trend trades. I've come to realize that I need stricter guidelines for managing my counter trend trade. Counter trend trading is more challenging than trading with the trend and requires patience, discipline, and careful risk management. As you can see, I got all caught up in shorts this week, even though my weekly program was bullish, hence why I had more losing trades than winning trades. But to be fair, those were the setups that presented themselves clearly to me in the charts. Finished the week just a little over break even, with about 1% increase in equity, $245, and overall we're up on the account 25.7%, which is $6,435. Any day or week at or above equity high is a win in my books. Let's get to hunting, guys. grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal line, which represent the time aspect of trading. The most important tool you need to track down IPTA's movement: time. Now remember, even though I'm going to show you both buy and sell setups, it's important to know that your high probability trades will be in the direction of your weekly program. With this model, you can take counter trend trades. For example, you can take sell setups even if your high time frame direction is bullish, and vice versa. It's just that your probability of winning reduces significantly, and that's exactly what happened to me this week, as you can see from the losing trades from this week. If you're new to trading, I highly suggest only taking trades in the direction of your weekly program, so you can avoid weeks like this where the market is highly manipulated and counter trend trading is low probability. We're going into this hunt with the understanding that you guys have already arrived at your higher time frame directional buy. This is just a hunt for purely setups. To the hunt, let's go. Monday, June 3rd, trade of the day breakdown. We had the AM session sell formation, which is a counter trend trade. We had high and medium impact news come out in the morning, 9:45 and 10 a.m. Post 10:10 is when we're looking for a signal to enter the market. And as you can see, during the opening range, we had price trade above a key high, displacement lower causing a market structure shift. The displacement leg has a fair value gap CB near the swing high. We're waiting for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg that caused the market structure shift near the equilibrium of the range. As you can see, we had a fair value gap CB at or near the 50% of the range right here. So above the 50%, we have the consequent encouragement of this CB. So you would have been tagged in this trade at 10:15, breaking even at 10:53, taking out that trade at 12:12 for a total time of 1 hour 57 minutes in this trade. Drawdown in this trade was 31 ticks. Let's look at factors that made this trade a high probability setup. First, we have the time aspect is AM section post 10:10. Check. The range, we're in the upper to middle quadrant of the range. We're in the premium for a sell. Check. Also, we have liquidity created right here in front of the consequent encouragement of the CB post 10:10. Check. 3 out of 3, making this a high probability trade that netted you 6% for the day. Hypothetically speaking, you would have been done trading for the week after this trade. Okay. Tuesday, June 4th, trade of the day breakdown. We had the AM session sell formation, another counter trend trade. This one failed. Okay, let's break it down. So we all start with the news. As you can see, we had high impact news coming out at 10 a.m. Post 10:10 is when we're looking to enter the trade. So as you can see, opening range, we had price trade above a key high. We took liquidity above a key high. Displacement lower causing the market structure shift. The displacement leg has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the EQ of the range. Have this fair value gap CB near the 50% of the range. You would have been tagged in this trade at 10:30. You don't get to break even. You're taking out this trade at 2:15 for a total time of 3 hours 45 minutes in this trade. Drawdown in this trade was 158 ticks for a 2% drawdown. Okay, so you would have took a loss in this trade. So I did get in this trade, and this is the trade that got me to realize that I need stricter management rules for counter trend trade. First of all, I really didn't like the displacement lower that broke the structure. I didn't want to see this CB used before the structure was taken. So I was wary of that, but I was like, okay, I'll give the trade a chance. And I gave it a chance. A counter trend trade, I actually moved to break even inside the new week opening gap. I moved to break even when price was consolidating in here. My gut was telling me that something's not right with this trade. First of all, you already had issues with the displacement, just to be on the safe side, as a counter trend trade is NFP week, move to break even, and then so you don't have to worry too much about the trade. So I moved to break even in this area, and as you can see, it comes back and takes you out, but you would have been down 2% on this day. Even though we took a loss, let's consider the factors that made this a high probability trade. First, we have the time aspect is 10 a.m. AM session post 10:10 is when we're looking to get in. Check in the range. We're in the middle to upper quadrant of the range. We're in the premium for a sell. And also, we do have liquidity here and liquidity here created in front of the fair value gap CB as well. So 3 out of 3, making this a high probability trade. And even though you took a loss, that is part of the game. Wednesday, June 5th, trade of the day breakdown. We had the launch session sell formation, a counter trend trade that failed again, highlighting the importance of sticking to the weekly program and understanding that your high probability trade will be in the direction of your weekly program. Okay, let's break down this trade. As you can see, we all start with the news. Wednesday, we had high and medium impact news come out in the morning. 8:15, 9:45, and 10. Close to the ending of the AM session, we had price trade above a key high, liquidity taken above a key high, displacement lower, causing a market structure shift. The displacement leg has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. After this candle closure with the confirmed the swing low, then you'll be looking to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg that took structure at or near the equilibrium of the range. We had a fair value gap right here at the equilibrium of the range. You would have been tagged in this trade at 11:30. Don't get to break even, taking out this trade at 11:42 for a total time of 12 minutes in this trade. Drawdown in this trade was 52 ticks for a 2% loss. Okay, let's consider factors that made this trade a high probability setup. First, we have the time. Yes and no. Technically, we have the time is a launch session. 11:30 starts is the beginning of the launch session. It's London close starting the launch session. So we have the time, the range. We're in the middle to upper quadrant of the range. We're in premium for a sell. No liquidity created in this setup, but we do have 2 out of 3 matching up to make this a high probability trade. Even though you took a loss, that's part of the game. You're selling in a predominantly bullish market. That is bound to happen. Thursday, June 6th, trade of the day breakdown. We had a AM session sell and a PM session sell setup formation form. Let's break it down. We had high impact news coming out at 8:30. 9:30 to 10 o'clock opening range. We had price take liquidity above a key high, displacement lower causing a market structure shift. The displacement leg has a fair value gap CB near the swing high that caused the market structure shift. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg near the equilibrium of the range, and we're looking to enter the market post 10. So as you can see, we had a fair value gap CB above the equilibrium of the range. You would have been tagged in this trade in the morning for 10:30. You don't get to break even, taking out that trade at 2:10 for a total time of 3 hours 36 minutes in this trade. Drawdown in this trade was 55 ticks for a 6% bagged and tagged. This was a counter trend trade. Okay, this trade also offered you another opportunity to get in during the PM session. As you can see, price trades above the launch session highs, displacement below causing a market structure shift. Displacement leg has a fair value gap CB near the swing high. It's still coming back into the CB from the morning setup. So it offered you another opportunity to get in. You would have been tagged in this trade at 154. Don't get break even, taking out that trade at 204. Total time in the PM session trade was 10 minutes. Drawdown in this trade was 70 for a 6% bagged and tagged. Another counter trend trade. Okay, so you had 2 opportunities on Thursday to get you 6%. Let's consider factors that made these 2 trades a high probability setup. First, we have the time aspect. This is the AM session setup, also PM session setup. Time aspect on both trades. The range, we're in the upper to middle quadrant of the range in the premium for a sell. Same with the PM session, upper to middle quadrant in the premium for a sell. Liquidity, both CBs had liquidity created in front of it. For the AM session, we had this liquidity right here. And for the PM session, we also had this liquidity right here that it came to take. And once it took that liquidity, you saw immediate reaction. Okay. And those were the 2 trades, potentially 1 trade, but two opportunities to get into that sell formation. Friday, NFP Friday, June 7, trade of the day breakdown. We had a AM session buy formation pro trend trade, the first one for the week. Surprisingly, on such a bullish week, this was like the first buy formation that I had seen that was valid to actually enter. Let's break it down. So we had the NFP unemployment data come out at 8:30, 9:30 to 10 o'clock opening range. We have price trade below key low, displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. We had the swing high form right here. For execution, we're looking to enter on a fair value gap created in a displacement leg that caused the market structure shift at or near the equilibrium of the range post 10:10 For entries in the fair value gap, we have three options where you can enter. So you can enter at the high of the fair value gap, you can enter at the consequent encouragement of the fair value gap, or the low of the fair value gap. I usually use the one closest to, if I'm buying, I use the first one below 0.5. So you would have been tagged in this trade at this high of the BISI right here. So yeah, you would have been tagged in at 10:11. Don't get break even, taking out that trade at 10:46 for a total time of 35 minutes in this trade. Drawdown in this trade was one tick for a 6% bagged and tagged. You see what happens when you take pro trend trade, the drawdown is minimal. If you didn't catch this trade, it also offered you another opportunity to get into the trade. It came back into the bit. It could have been tagged in this trade at 11:11. Don't get to break even, taking out this trade at 12:12 for a total time of 1 hour 1 minute in this trade. Drawdown this trade was 17 tick for a 6% bagged and tagged. So if you missed this entry, the market offered you another opportunity to get in here. Let's look at factors that made this trades a high probability trade. First, we have the time aspect, the AM session check. We have the range. We're in the lower to middle to lower quadrant of the range. We're in a discount for a buy. Liquidity, we don't quite take liquidity on this entry right here, but we do have this entry does take this liquidity and then straight expansion higher. So 3 out of 3 on the second if you entered on the second trade, but 2 out of 3 if you entered in the first trade. Either way, both were a high probability set, netting you 6% for the day. This NFP Friday offered us another setup during the PM session. We had a sell formation form during the PM session. This Friday, we had a seek and destroy market profile, which means that liquidity was taken on both ends. Let's break down the PM session trade. Before PM session, we had price trade above a key high. Already had the unemployment claims come out in the morning. We don't really care about the news. If we're just using it as a TV guide of when to anticipate sell. So we had liquidity taken above a key high, displacement lower causing the market structure shift. The displacement leg has fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg that caused the market structure shift at or near the 50% of the range. As you can see, we had the fair value gap right here. So when the 1:30 p.m. session started, we had price trade to the, so this time you would be entering at the consequent encouragement of the CB, because that's the first premium array above the 50%. Okay, so you would have been tagged in this trade at 1:30, breaking even at 2 p.m., taking out the same time at 2 p.m. Total time in this trade was 24 minutes. Drawdown on this trade was 2 tick for a 6% bagged and tag. Let's look at factors that made this trade a high probability setup. First, we have the time aspect is the PM session check. Range, we're in the middle to upper quadrant of the range. We're in the premium for a sell. Liquidity, we have liquidity here created in front of the CB. When price takes that liquidity, you saw immediate reaction. 3 out of 3, making this a high probability trade, netting you another 6% on this NFP Friday. And that was NFP week, done and dusted. Ended the week just a little bit above break even. I survived NFP. You'd be surprised the number of new traders that don't survive this week. I'm sure a number of you blew accounts or lost a lot of trades today. Trust me, it's not on you. This week is highly manipulated. Okay, so don't be down. Keep going. And I hope you guys enjoyed tracking IPTA this week. See you all next week. Every week, we have shown you at least one or more opportunities that could have netted you 5%. With a 2% risk, if you had taken all 6 trades this week, you'd be looking at 20% for the week. But remember, we're only looking for one trade that will net us our 5%, and we're done trading for the week. As traders, we must be content with enough, and we must learn to limit trade frequency. The less you're in the market, the less of your money it will take. I hope you found TOTD insightful, and hopefully you enjoyed this one. Deciding to become a trader is the greatest decision one will ever make. It is the fastest way to build the life that you want, and too many of us fail at it. 90%. This is because we're not equipped with the right tools to ensure survival, let alone thrive. There is a way to succeed at trading. Trade of the day is about showing you how we at I'm the Trader are doing it and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching. See you all next Saturday, same time, same place. Happy hunting.